To begin, I believe there was a question directed towards maybe more Sean about, are humans disadvantaged if disclosures are directed more towards machines? And is it better, within a resource-constrained organization to dedicate your computational resources to fine-tuning disclosures or to running the business?
Yes. Should I respond or? Can you hear me?
Yes.
Okay. Yeah. So, yeah, I think that's excellent question. So while we are doing this project, we are also wondering what's the optimal way. Like, what's the best way for managers? What's the best way for shareholders? So that's an excellent question. We also we're trying to get touch on. So basically, depends on the manager's objective and incentive. If the manager's incentive is to maximize the firm value, stock value, to increase the liquidity of the firm trading, probably they need to allocate some resource to make the machine readers make them more friendly, to make disclosure more friendly to them. And but I think the question raised makes sense. Sometimes manager can actually focus on some real activities, operations, product development, and which one is the best way? So far, we don't have the answer, but that's definitely a good angle to think about it. What's the optimal way for managers in a new era of the AI? This is new world, new technology. We don't have answer yet, but the good thing is we are on the route to find the answer. So that's my my take on this. Yeah.
Great, thank you. Our next question is for Ileana. What role have you seen blockchain play in the finance area, and has there been an accelerated uptake of this technology?
Mm-hmm. So while there certainly has been accelerated uptake in the blockchain space, I don't know if it's necessarily being driven by the finance function. And so let me explain. Some of the biggest programs that we're seeing in the enterprise blockchain space in Canada include efforts such as by CMHC, Canada Mortgage and Housing Corporation, where they're looking at DLT as an enabler technology to completely reimagine the mortgage landscape, from issuance all the way through to securitization. And that's a process that requires not just CMHC, but a number of financial institutions. And so CMHC recently published a paper. It's publicly available. They've been engaging in consultations with the financial services industry to understand how they might move forward in that future direction. There is, of course, a very tangible impact that this is going to have on the finance functions across those organizations. However, this entire program is not being led by the finance function, but the finance function is involved in helping to calculate what is the ROI, what is the business case, should we move forward, yes or no. So that's more how I see the blockchain adoption moving forward and the role that finance can play in the process. If you look at some of the other programs that are underway, whether it's in the insurance world with the Risk Stream Collaborative, where you have over 40 different insurance companies around the world who are all collaborating, that's being led by business value. It's not being led by the finance function, but with finance, of course, being involved. As the Bank of Canada starts to look more closely at the topic of central bank-backed digital currencies in collaboration with all of the FIs, once again, being led by business and institutional value, being supported by the finance function. And so that's my hunch of where things will continue to evolve. I hope that answers the question.
Perfect, thank you. Our next question, I believe, is for Tees. Is investor disagreement on MD&A correlated to share price performance, or even maybe more broadly, just overall general performance metrics of the firm?
Yeah, that's an interesting question. And I saw the question pop up and I was thinking about it, and I'll answer it kind of in two ways, which is one, based on what we find with our evidence, and also more generally what we find based on our broader literature that we have on this topic. And I say that on aggregate, taking the whole market, this shouldn't necessarily have any long-term implications when it comes to share performance, because the idea would be a somewhat efficient market with enough time, these things will resolve itself, right? But what we kind of tend to observe based on our data seems to suggest or be consistent with the idea that there might be short-term inefficiencies, where if disclosures are presented in such a way or they contain topics where people tend to have more disagreement, it takes longer for people to reach a kind of a consensus as to what that disclosure really means. So there might be some short-term inefficiencies, but long-term, there shouldn't necessarily be a share price performance impact.
Thank you. Our next question is for Ileana, just broadly about the conclusions reached in the CFO study. Did you find any differences pertaining to industry or geographic trends or public versus private companies, or was there some consistency all across the board?
So the statistics that I presented were the aggregate ones across all of the industries. But of course, there are regional variations. And what we've done as part of our research is have the ability to be able to drill down into a particular industry or into a particular geography. So if folks have follow-up questions, feel free to send them to me, and I'm happy to share what we can.
Thank you. Next, I guess going back to Tees again, you mentioned that you were going to make your tool available for broad use. And I was just wondering, how do you envision practitioners using that tool and incorporating it into their kind of everyday roles?
Yeah, thanks for that question. I'd say because our tool is trained to give predictions on financial documents, like financial narratives. And with any machine learning tool or any AI tool, if you give it something that it has never seen before, it's not going to perform very well, or it's not going to give you something that's very useful, and it might even be harmful. So I'd say kind of the space we're thinking on is texts that have the intention of communicating some sense of financial performance, very often forward-looking. And those type of documents, that's what we've trained our algorithm on. And that's where practitioners might find it useful to have a little bit of an idea as to kind of how much of a difference you could expect depending on the literacy of the users. So that's kind of what we have in mind. And we realize that that's not necessarily applicable to every type of document that a practitioner would like to answer that question for. But it's one of those things where it's better to have an AI algorithm or a machine learning algorithm that does a good job for certain documents than have one that does a horrible job for all documents. So that's kind of the approach that we're taking there.
Great, thank you. Next for Sean, just getting a sense of maybe how many firms are actually starting to tailor their disclosures towards this machine-based audience, and for maybe some firms that haven't started that yet, ways to start to slowly incorporating that into their disclosure decisions.
Okay, can you hear me now? Okay. Yeah, so from our data analytics, what we found is a large portion of the large portion of firms actually already start catering to the machine readers, and we also talk to many PR officers, and so this is an increasing trend, I think, in the industry. People are doing this right now, and we also found like a lot of big firm CEO, they will attend like a training camp regarding how the talking style, and so these are all like going on stuff in the industry, and I think there's an increasing trend on that, and so yeah, this is what we found from our data and anecdotal evidence.
Great, thank you. And then a question for Ileana. There's always this notion, if it's measured, it can be managed. And now with this rise of data, do you see new performance metrics popping up, potentially new emerging sources of data? And with this kind of new role, do you see CFOs potentially coming from different backgrounds, or things that potentially aspiring CFOs could think about in order to reach their goal of assuming that role?
Absolutely. So the skills gap was one of the things that emerged in the survey as an area where there is a lot of disruption and upheaval. CFOs surveyed recognized that sometimes the skills that they had weren't adequate and that they were needing to upskill. The other concern they had was in keeping their teams motivated and excited to show them that there is a progression path. Some of the most important skills that have been bubbling up over the course of the past few years and are only going to become more important is leadership skills, and data fluency and collaboration. So those are the 3 areas. I heard one of the remarks from one of the previous panelists around do we need to change our recruiting tactics to look at folks coming out of computer science programs versus just management programs. We're already starting to see that. And if you look at the stats, 60% of the finance function tasks are now automated. So what does that suggest about the more entry-level talent that is required and that we're grooming throughout the organization? There's a much bigger emphasis on data and analytics and some of the harder skills.
Great, thank you. And then I'll leave this final question open to all the panelists in terms of there's obviously this increasing role that automation and AI is playing. How do you see that role, whether it's complementary or substitutive in terms of people who usually assume those roles and what they can do to make the most out of the technology and also add the most value to their organization?
Yeah, I can take a first stab at this. And I'll answer it from the perspective of the accounting systems and analytics class that I teach to kind of our incoming accounting students. And they very often have this question as well. And I usually answer it by saying, well, what this allows you to do, and this is, I think, something that has popped up throughout the conference as well, is that the intention here is to make your time more efficient. And it allows you to do things in a more efficient way that otherwise would take you a lot of maybe manual or repetitive labor. And just being able to kind of draft up a quick script or write up a quick program or something to deal with that can save you a lot of time and kind of focus on things that from a career perspective are going to be a lot more beneficial than saying, well, I was able to do this thing for 10 hours in Excel, which that's not going to help you all that much. Well, it does cost you a lot of time and effort. So that's how I see it. I see it very much as a complementary thing, but you have to kind of strive to find where those efficiencies are and kind of target those.
I can chip in to talk about Tier's point as well. So I feel like the AI technology and the machine learning, they start with substitutional role. They may replace some easy work, but we need to, like Tier said, I totally agree with him. We need to make change on our side to make it complementary. So I have our team designed a blockchain which can automate easy auditing work. So basically, there's a lot of easy technical auditing process can be automated by blockchain system. So what's the implication for the auditing market? The system cannot replace the discretionary job. So to estimate fair value and discretionary account, this kind of job cannot be actually replaced by blockchain and some AI at this moment. So it's kind of like Tia says, we may change our curriculum. We have to learn some new technology. We have to move on to some job that cannot be replaced by AI and machine. So that's something I want to share with the audience. This is an opportunity for us because they replace the easy routine work, but this is also a challenge for us. How should we human find a way that can be complementary to machine, that find a job that cannot be replaced by machine? Yeah.
Mm-hmm. Just over a year ago, our Chief Technology Officer, Paul Doherty, wrote a book called Human Plus Machine, and it examines exactly that. Where is the collaboration and what are the new types of roles that are emerging that we didn't even have before around folks who are training the machines to help them out on their work. We've had some exciting case studies coming out of Accenture where we've actually incentivized some of our employees to train the machines to essentially take over their jobs with the promise that every person that was involved in this upskilling process would retain their employment with Accenture and would be retrained into newer, more high value add roles. And we suspect that many other organizations are going to move in that direction, which frankly makes life that much more exciting for our employees. If the machine could do that job, chances are it wasn't that exciting to begin with. So it's a win-win across the board.